Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 index future. We've got the E-minis up here. Now, the last time we were looking at this breakout past these cloud chart resistance levels, managed to get past there. Then the top end of the cloud became a new support zone, that 4160 zone basically. Then had to get through the 4224 resistance zone, managed to break past that. Took 2 weeks to get past that. And now it met its match at 4307, and that's the other old cloud chart resistance zone that needs to break past. If it managed to break past that zone, then the next upside resistance target would be this zone here, this bottom of the old cloud chart shadow, that resistance zone there, 4410. But I think the market might be ripe for a consolidation. This downside risk back down to the top end of the front end of the cloud. So we can see this 4224 being tested, as well as this 4160 zone to be tested in a consolidation, a kind of consolidation of this move from this March rebound low here, from these support zones back up to these resistance levels here. Now we can expect about a 38% Fibonacci retracement, and that will bring us roughly within this back down to the support zone. So we can see the S&P retesting the top end of the cloud here for support. In a very weak market, we can dip back down to 4070, and then rally from there. But that's only if this resistance at 4307, if that now holds. There's consolidation risk, also seasonal weakness over the summer months. We could see some downside risk towards these top-end cloud chart support levels. But so far, looking for maybe a retest of this 4307 to break out past that. If the breakout fails, then we're going to be back testing this 4184, which is the turning line of the cloud, and then there's downside risk to the top end of the cloud here between 4160 and 40669.70. So that's the big picture on the weekly. But the good news is we're back above the top end of the cloud, and that's bullish from the Ichimoku cloud chart perspective. So far so good. We're back in bullish territory on the weekly Ichimoku. Now turning to the daily. Yeah, we can see a little bit extended from the top end of the cloud. Every time it becomes extended, it pulls back. You can see the nice strong rally become extended from the cloud, pulls back, pulls back. So now there's downside risk to 3 levels to watch out here. 4209, which is the turning line of the cloud, and then the standard line 4184 is the support zone. It will look like it's going to come back and retest this 4224 zone in any kind of seasonal weakness in the market. That 4300 zone, that resistance level held, and there's downside consolidation risk back down to this 422 before 220 and 4220. That 4209 cloud chart support level of the turning line. So these are the downside risk targets. The turning line, the standard line, and the top end of the front end of the cloud is a key support zone to look out for on the daily in terms of any kind of seasonal weakness. But so far so good. It's been a great trade from this March low here below the cloud. Fantastic rebound rally from this cluster of support, broke through the bottom in the cloud, then had a very nice long period of consolidation, lots of resistance there to get past. Now we've broken past that. It can come back to retest that resistance, but at least we're back above the cloud. So the market's been bullish since this cloud crossed here back in March, and that futures trade has delivered some nice trading profits on the hourly Ichimoku. Now turning to the 4-hour chart. Bit extended from the top end of the cloud. You can see we've got downside risks levels to watch out for. This front end cloud chart level, that can be a support zone, 4264. And then the other one in a very weak market can come back right down to the turning line of the cloud. So these are the downside risk targets, 4264 and 4239, 4240 basically. On the 4-hour Ichimoku, we can see we had a fantastic rebound, but now a little bit extended from the top end of the cloud. So we do expect some form of a consolidation. Look here, back here in May, this rally, and then back consolidation, rally, consolidation. So now in consolidation phase, and watch out, these two highs here will also give you an idea as to where the potential support is in terms of any weakness in the market. But so far so good. The 4,300 zone resistance held, and do expect a bit of a consolidation and then maybe another attempt at that move. Now, we are going into a seasonal weak period, June, July, August. So there's downside risk to these two levels here, as well as the front end of the cloud here at 4211, and the bottom end of the cloud here. That's another support zone to watch out for. So that's another line in the sand. But so far so good. Price actions above the 4-hour cloud, so that's bullish. Daily is bullish, weekly is bullish as well now. And let's take a look at the hourly Ichimoku. Fighting for support at the top end of the cloud. It can dip below this front end cloud chart support level to look for that support zone there between 4264 and 4262. And then this bottom end cloud chart here, that's if the market's very weak. If support fails at the top end of the cloud here, and this 4262 fails, then we're going to probably test this bottom end cloud chart support zone. There's a whole cluster of them between this support zone there and the bottom and the front end of the cloud. So those are the downside risks to look for on the hourly Ichimoku. But so far so good. We go back to the daily. Consolidation back down to the support zone, but price actions above the cloud now for a while. So we got a nice little rally in the S&P futures on our hands, with downside consolidation to this 4264, 4262, and 4240 basically over the short term, with significant downside risk to 4209, where the turning line of the cloud is, as well as the standard line of the cloud. So any kind of weakness over the next couple of weeks, we could see these levels being retested, provided this 4307 resistance zone holds for now. But so far so good. We've got a nice little rally on our hands with downside consolidation risk to key cloud chart support levels. Until next time, happy cloud chart trading. Bye for now.